Hello everyone. Why HDFC Bank ADR fell 4% and ICICI Bank ADR fell 2%? Second, what happened in the US market last night? All this we are going to discuss in a regular pre-market report video for today, 2nd December 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about Indian ADR last night. If required, please pause and have a look. This is what happened. As we see, both the IT stocks fell marginally, so their arbitrage difference also none. Whereas in case of Reliance, it fell marginally, but already it was factored in the Indian market itself. All okay, but the problem here is the banking stocks. It was disastrous. As it is, HDFC Bank ADR fell about 4% and ICICI Bank ADR fell about 2%, which is massive and substantial considering their weightage in both Nifty and Bank Nifty. I mean, there is no concrete reason that I was able to find, but I will discuss what are all the related news. First, for HDFC Bank, I think this happened on Friday itself, but all the websites were just highlighting this yesterday evening. Apparently, RBI fined HDFC Bank for 91 lakh rupees for the violation of KYC related issue. And second, HDFC Bank appointed Mr. Vibhas Nayak as their new chief HR officer. So those were the two only HDFC Bank related news yesterday that I am aware of. Here, I personally believe none of them is influential enough to push down the ADR by 4%. So what I think happened was this. We know at the start of November month, SEBI placed the new rule that to increase the Bank Nifty number of stocks to 14 from present 12, and also asked the NSE to reduce the top 3 stocks combined weightage to 45% from present 62%, and that implementation plan to be in 4 tranches, like one in each month before end of March 2026. So the first tranche will be on December this month. Hence, I guess all these foreign option manipulators like Jane Street and GQG partners are offloading the HDFC Bank and ICICI Bank ADR shares. Just for info, only for Bank Nifty, SEBI permitted until March 2026, whereas for BankX and FinNifty, they have to cap the weightage by end of December. Hence, if it's just they are offloading for that reason, then that HDFC Bank ADR fall won't materialize in the Indian market, as it just reduces the dollar premium in HDFC Bank ADR from 8 to 5%. So the takeaway is, if this fall is associated with fundamentals of the stocks, then it will materialize today in the Indian market. If not, then it won't. Whereas in ICICI Bank case, apart from this, yesterday they got approval from RBI to make the ICICI Prudential Pension Fund as full ICICI Bank subsidiary. And with SEBI, ICICI Bank got approval for another company called ICICI Prudential Asset Management Company to list that as an IPO. Again, here too, I'm not finding this as negative. So that's my takeaway. If I missed any, please let me know in the comment section. However, none of the banking stocks negativity was transferred to GIFT Nifty. In fact, during US market trading time, it traded about 26,400 mark. But early morning today, it trimmed some of its gain and traded at 26,342. So equating that with the spot market, for now it's indicating the flat opening. Then moving to US market, yesterday some analysts including Reuters.com predicted that in the next Bank of Japan's monetary policy meeting on December 18th and 19th, Bank of Japan is going to increase the interest rate from 0.5 to 0.75%, which in turn strengthened the Japanese yen against US dollar, and also it increased the Japanese 10-year bond yield to like 15-year high value. Hence, yesterday Japan's main index Nikkei fell near 2%. In the multiple pre-market videos we discussed this. Because of very low interest, investors borrow money from Japan and invest in global stock market and other capital investments too. So raising Japanese interest rate is particularly bad for US as well as for India. Hence, it's also one of the main reasons why Indian market fell yesterday despite opening over 100 points gap up. And at that time itself, US future market was trading constantly around negative 0.5%. In line with that, along with the profit booking and poor US manufacturing PMI data, made the US market to close negative. Already analysts were expecting a manufacturing contraction but the actual value contracted more than expected. Hence, in the end, last night Dow Jones was down by 0.9%, S&P 500 decreased 0.53%, and Nasdaq was down by 0.38%. So, US VIX increased by 5% and moved to 17.2 from 16.3 on last Friday. Please note, coming Friday, India's RBI interest rate decision, the next week Wednesday, US interest rate decision, and on December 19th, it's Japan's interest rate decision announcement. Each week from this week onwards, there is a defining macro. Other than that, because of the OPEC plus countries' no oil production increase in January month, made the oil price to increase 1.5%. So at the time of this video, WTI crude trading at 59.5 US per barrel, whereas Brent crude trading little above 63 US per barrel. As a summary, US market closed negative and there is some weakness in Indian banking stocks. In addition, macro-wise, India's industrial production grew by lowest value in the last 12 months, just 0.4%, which was way less than the analyst expectation as well as previous month. Then the another macro, GST collection, it also fell to the lowest value in the last 12 months, just 1.7 lakh crore rupees. So all those were negatively influencing things, but still for some reason none of them are factoring in the GIFT Nifty as it is indicating a flat opening. Anyway, about institution, in the cash market, FII net sold for 1200 crore rupees, whereas DI net bought for 2600 crore rupees. Then moving to participant-wise open interest analysis, yesterday index future open interest increased 2%, whereas on the index options, 26.5% new call option open interest and 0.2% new put option open interest were added. Because of massive call option open interest addition, the PCR ratio decreased to 0.91 from 1.15. Then stance-wise in the index options, client holding net 10% open interest favoring bullish position, whereas FII and proprietary traders having net 5.9% and 3.6% respectively of their open interest favoring bearish position. In case of future index, client having 62% of their open interest on the long side, whereas on the other hand, FII is holding massive 81% of their open interest on the short side, and proprietary traders also having 62% of their open interest on the short side. Then as per stock open interest, Keynes, Page Industries, Union Bank of India, Novama, Colgate Palmolive and Mankind Pharma are some of the 89 stocks that got an increase in open interest along with a negative close indicating the short build-up. On the other hand, Maruti Suzuki, Ashok Leyland, IEX, JSW Steel, Ultratech Cement and Power India are some of the 50 stocks that got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, before our market opening, Fed Chairman Powell's speech and Japan 10-year bond auction are due to release. Then in the aftermarket hours at 3:30 p.m, Europe consumer inflation data. And in the night for US, number of available job openings data are the important things we need to keep an eye out for. Coming to technical, Nifty opened more than 100 points gap up but immediately started to drop throughout the session, then closed below 26,200. Thus on the daily chart, Nifty formed a long bearish candle with a minor lower shadow, indicating pressure despite some buying interest at lower level. However, it still sustained above all key moving averages, maintaining the higher high, higher low formation, but RSI at 61 turned bearish. All this indicates caution in the short term, though the overall trend remains bullish. Hence, Nifty might consolidate further with support at 26,100 to 26,000, followed by 25,900 as the crucial support level. On the higher side, 26,300 is expected to act as the key resistance zone, as a decisive close above it could open the door for a sharp up move. In case of Bank Nifty, it opened near 350 points gap up and was negative throughout the session but stayed well above 59,500. Thus on the daily chart, Bank Nifty formed a bearish candle after a doji pattern formation in the previous session, indicating selling pressure at higher level. It witnessed profit booking in the upper Bollinger Band, which was expected after its record high journey. However, Bank Nifty stayed above the short and medium term moving averages as well as the middle of the Bollinger Band, with momentum indicators still showing a bullish bias. Hence, the key support levels could be at 59,200 and 59,000, while resistance could be at around 60,000 mark. Regarding the options front, the maximum call option open interest was at 26,300 strike, followed by 26,500 and 26,200, with maximum new call option hitting at 26,300, 26,200 and 26,250 strike. On the put side, the maximum open interest was at 26,000 strike, followed by 26,100 and 26,200 with maximum new put option writing at 26,150, 26,050 and 25,850 strike. Thus from options data, it's indicated 26,300 as the key resistance with key support at 26,000. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.